Hi everyone, my name is Xinrong. This is our investment group. There are three events that our group predicted, and this is our recommended buy and sell strategies with the South32 Limited and the Woolworths Group Limited. The graph shows us the inflation rates are keep rising during this year, and not only for coals and crude oil increasing, but also the ironstone, copper, and aluminium prices are increasing, which is the South32 are selling. So that's why I'm going to predict the share price is going to increase in the short term. Another factor is the United States federal funds rates are keep raising, and we predict that it will keep raising in order to control the inflation rate in the 2 or 3%. That's why our group recommended to buy South32 in short term and sell it in the long term. Another factor to cause the decreased share price is the collapse of Chinese real estate market, which is introduced by Xiaoman. She will explain Chinese real estate markets are going to collapse.
Hi, I'm Xiaoman Liu. I'm going to talking about how the industry in China to impact S32 company stock. As we know, shipbuilding is also a big oil industry. China's total seaborne trade account of about 30% of the global market. Because of COVID-19, the drop in demand of transport has also led to a drop demand of ship. This will reduce shipbuilding industry. Also, in this graph is showing the availability rate of the consumer buy the house. It is decreasing in recent year. That means house vacancy rate is increasing. In China, a lot of building appear phenomenon of rotten and building. Less and less people will want to buy the house. As shown in the figure, government introduced a new policy which is use wheat to exchange real money. A kilogram of wheat can exchange 2 Chinese yuan used to buy the house. The government want to use this policy to attract more and more farmers buy the house. Because if the housing vacancy rate is increasing, developer will stop to building house. Chinese demand of building material will also fall and reduce the demand of iron, oil, and aluminum. This will also impact the S32 company stock in the global market. Next, Jianyu Wang will introduce the detail about the Woolworths part.
Woolworths belongs to the retail industry, therefore it will not be overly affected by the COVID-19 and the US inflation. However, due to the rapid rate of global inflation, the US has raised interest rates several times, which has made the entire market environment in a stage of tightening, which means that the current economy is in the late suspension stage or the stage 5. In other words, for a short-term period, most of stock market will likely show a sustained downward. This means that it will not be the best time to invest in Woolworths, and selling would be a better choice. When the market economy runs to the late construction or stage 2, it will be the best time to buy Woolworths stock. The following is the graph of the relationship between WACC and the stock price of Woolworths by Jingxuan.
Hi everyone, I'm Jingxuan Hou. This is the relationship between WACC and share price of Woolworths. We can see from the chart that the predicted share price is higher than the market share price, which means that the stock price is undervalued and it should be bought. We believe that due to China's current COVID-0 policy, exports are still severely restricted. The outbreak has led to export restrictions. The Australian retail industry lacks cheap suppliers to import high quality and cheap goods. Therefore, we predict that China's opening up policy will increase Woolworths' share price in the future. Next, I'll show you a graph about China's exports in recent years to further confirm our prediction. This graph shows China's import and export growth rate and trade balance from 2018 to 2020. We can see that China's exports has gradually increased from 2019 to 2020. From 2020 to 2021, there was a rapid rise followed by a rapid decline. After that, China's export continued to decline. This is due to the pandemic export restrictions. Therefore, we predict that when China implements the opening up policy and no longer restricts the import and export of goods, it is expected that the overall stock price of the retail industry will rise. That's all for our presentation. Thank you for watching.